Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms, Chapter 4, Admission of a Partner. And in this video we will discuss when new partner has to bring capital on the basis of combined capitals of old partners. So let us see some questions related to this topic. So we will discuss question number 85. In this question, we have to determine the new partner's capital, which is based on the combined capitals of old partners. That is the only thing different in this section. Rest of the preparation of, like say, a revaluation account and partner's capital account and balance sheet are the same. So only the calculation part of the new partner differs. So a little change in the question, rest of the things are just a repeat of it. And I hope that you have watched all the previous videos and you have got all your concepts clear. Now, on 31st March 2023, the balance sheet of Ram and Shyam, who share profits and losses in the ratio of 3:2 was as follows. Here is the balance sheet given. Last day of the financial year. Creditors rupees 70,000, general reserve rupees 25,000, employees provident fund rupees 55,000, capital of Ram rupees 1,50,000, Shyam rupees 1 lakh. Total capital is 2,50,000. To the asset side, cash at bank rupees 25,000, debtors are of rupees 1,62,500, less provision of rupees 12,500. In the outer column, there is 1,50,000. Stock rupees 82,500, machinery rupees 1,42,500. Grand total of balance sheet is rupees 4 lakh. Then the question further says, they decided to admit Mahesh on 1st April 2023 for 1/5 share, which Mahesh acquires wholly from Shyam on the following terms. Now this statement tells us that who is the sacrificer. In order to accommodate new partner Mahesh as a partner, some portion of the total profit has to be sacrificed by the old partner in favor of the new partner. Here, that sacrificer is Shyam. And Shyam's portion is sacrificed in favor of Mahesh. So what all amount Mahesh brings as premium for goodwill will be paid to the sacrificer Shyam. I hope that you have understood this concept, and it is repeatedly discussed in most of the questions. It is discussed that in all the questions actually, that the premium brought in by the new partner is to be paid to the sacrificers. So here only one partner Shyam is the sacrificer. The other partner Ram has not sacrificed anything in favor of the new partner. The terms are, Mahesh shall bring rupees 25,000 as his share of premium for goodwill. A debtor whose dues of rupees 7,500 were written off as bad debts paid rupees 5,000 in settlement. A claim of rupees 12,500 on account of workmen's compensation was to be provided for. A machine was undervalued by rupees 5,000. Stock was valued 10% more than its market value. And last, Mahesh was to bring in capital equal to 20% of the combined capitals of Ram and Shyam after all adjustments. Now this is the only point in which we have to focus more. Here it says that the new partner has to bring 20%. 20% is 1/5 of the total, fine, of the total capital of Ram and Shyam. It is not saying that the 20% of total capital of the firm. Like in the previous section in the chapter, in the previous video, we discussed that the new partner was bringing a portion of total capital. But here the new partner is bringing a portion of the combined capital of old partners after all adjustments are made. Means the capital which is given in the balance sheet in the question, that is not the capital on which 20% is to be calculated. 20% is to be calculated after all the adjustments of admission of a partner is done. Then the closing capital balances of the old partners will be added together and 20% of it will be brought by the new partner. That's the thing. prepare revaluation account, partners capital accounts, and balance sheet of the new firm. So let us see the detailed explanation of this in the solution. Solution 85. In this, there is a bad debts recovered of rupees 5,000. One of the debtors which was written off as bad is recovered now. So bank will increase by bank rupees 5,000. Money will increase in the asset. Then a debtor, yeah, that is it. Debtor who was supposed to bring money. A claim of workman compensation is to be accepted. So to workman compensation claim. The firm has accepted a claim of rupees 12,500. Then stock is overvalued. So we will decrease the value of stock. You see, stock is overvalued by 10%. It means the stock is at 110% in the balance sheet. So instead of 110%, we have to make it or bring it down to 100%, which will be the true value of stock. Stock given in the balance sheet is 82,500 and we want 10% to be reduced from its book value or from its original value, and this value is 110% of the stock. So we will divide it by 110 and then we will find out the difference, that is 10%. So it is 7,500. So actually it means that 75,000 worth stock is shown in the book at rupees 82,500. So we have to bring it down to rupees 75,000 by deducting or by reducing it by 7,500. Machine, the value of machine is increasing. So by, yeah, here also you can write by machine 5,000. That is all. Now this side grand total is 20,000. So there is a debit balance of rupees 10,000 by loss on revaluation, and it will be given to the partners, old partners in their old profit sharing ratio, Ram and Shyam. 10,000 divided by 5 is 2,000, multiplied by 3 is 6,000. I hope that you are comfortable with arithmetics, simple mathematics, and it is mental mathematics. If you are not smart at it, one should practice a little and you will definitely see that in lesser time you are able to solve big questions, and that also correctly. Fine. So actually I am not discussing how calculations and all are made because I know that you all are smart in that. I am discussing accountancy here, so I need your cooperation in this. In partners capital account, first we will write by balance brought down as given in the balance sheet, rupees 1,50,000 and rupees 1 lakh. Then general reserve is also there. So general reserve will be broken in the old ratio. It is 15,000 and 10,000. The ratio is 3:2. So 3:2. Then loss on revaluation, rupees 6,000 and rupees 4,000. Then premium for goodwill brought in by the new partner Mahesh. Premium for goodwill entire will be paid by Mahesh to Shyam because Shyam is the sacrificer. Now we will close the old partner's capital account. So to balance close down. Before and then only we will be able to figure out or to calculate how much Mahesh is bringing as capital. So it is 1,65,000 minus 6,000. Closing balance is 1,59,000. Here it is 1,35,000 minus 4,000 is 1,31,000. Now the question says that Mahesh was to bring in capital equal to 20% of the combined capital of Ram and Sham after all adjustment. So these are the capital balances after all adjustments. Now combined capital of them is how much? It is 2,90,000. And Mahesh has to bring 20% of this. So 20% of this, when we calculate, it is 58,000. So by bank we can write 58,000 he will bring as his capital, which is 20% of the combined capital of Ram and Sham after all adjustments. So this is what it means. This is the only step new in this particular question. Otherwise, all the other things related to partner's capital account, rest of the things, and revaluation account and making of balance sheet is again and again discussed in all the videos. Now we will prepare the balance sheet of the new firm. In the balance sheet, let us write capitals first. Capitals of Ram, Shyam, and Mahesh. Closing capital balances, that is 1,59,000, 1,31,000, and 58,000. So total here is 3,48,000. Creditors, no change in the value of creditors, 70,000. Then employees provident fund will remain the same. It cannot be distributed to the partners. And there is workman compensation claim, which the firm has accepted. It will be paid in future. Till it is paid off, it is a liability. Then in the bank, we were having a opening balance of rupees 25,000, and bad debts recovered are of rupees 5,000. Then 58,000 is the capital brought in by the new partner, and 25,000 is the premium for goodwill brought by the new partner. So adding all this is 1,13,000. Debtors same. Then stock was overvalued, and now the real value of stock is rupees 75,000. Then machine was undervalued, so it was 1,42,500 plus 5,000, it is 1,47,500. Add all these things, you will get rupees 4,85,500 as grand total. So this is how the question is to be understood and solved. Now let us see the last question of the chapter. An and Shan are partners sharing profits in the ratio of 3:2. Their balance sheet as at 31st March 2023 was creditors of rupees 2 lakh, employees provident fund of rupees 30,000, bank overdraft of rupees 1,70,000, reserve, that is undistributed profits, of rupees 1,50,000, capital An rupees 7 lakh, Shan rupees 6 lakh. To the asset side, we have got cash of rupees 1,48,000, debtors rupees 2,05,000 less provision 3,000. In the outer column, it is 2,02,000 rupees. Stock rupees 2 lakh, machinery, plant and machinery, it is 6 lakh, building rupees 7 lakh. Grand total is rupees 18,50,000. They agreed to admit Mohan for 1/4 share of the on the above date, subject to the following terms. So let us discuss the terms at which the new partner is admitted. Mohan to bring in capital equal to 1/4 of the total capital of An and Shan after all adjustments including premium for goodwill. So it is the same point as we have discussed in the previous question number 85. Building to be appreciated by 20% and stock to be depreciated to 70%. Be careful about this by and to. Provision for doubtful debts on debtors is to be raised to rupees 10,000. So from 3,000 we have to increase it to 10,000. So by increasing by 7,000. A provision be made for rupees 18,000 for outstanding legal charges, that is increase in liabilities. Mohan's share of goodwill premium was calculated at rupees 1 lakh. Prepare revaluation account, partners capital account, and the balance sheet of the new firm. So let us see the solution for this. So building is appreciated by, by building, increase in asset or decrease in liability to the credit of revaluation account. Building is appreciated by 20 percentage. So 7 lakhs 20 percentage is rupees 1 lakh 40,000. Then stock to be depreciated. So decrease in asset or increase in liability. So to stock is decreasing by 30 percentage. Fine. So 2 lakhs 30 percentage is rupees 60,000. Then provision for bad debts, provision for bad and doubtful debts is to be increased to 10,000. So 3,000 is already there. So we will increase by 7,000 so that it is 10,000. Then there is a provision to be made for outstanding legal charges. Outstanding legal charges of rupees 18,000. That's it. Only this much. Now we get a credit balance, which is a profit on revaluation, 55,000. It will be transferred to partners. In the profit sharing ratio, that is 3:2. So to Ann and Shan, 33,000 and 22,000. Buy balance brought down. It is 7 lakh and rupees 6 lakh. Then there is reserve also in the balance sheet. So reserve will be paid to the old partners in their old profit sharing ratio. So 1,50,000 as 90,000 and 60,000 rupees. Then profit on revaluation. Do not forget to write revaluation account. Sometimes it is missed. And then premium for goodwill. Premium for goodwill brought rupees 1 lakh will be given to the partners in their sacrificing ratio, which is the old ratio here. In this question, the old ratio is our sacrificing ratio because new ratio is not suggested in the question, or a special sacrificing ratio is not suggested in the question. Therefore, now we will close the accounts of Ann and Shan so that we can calculate the capital for Mohan. So to balance close down. Grand total it here, it is 8,83,000. Here it is 7,22,000. Now what is said in the question is that Mohan to bring in capital equal to 1/4 of the total capital of Ann and Shan after all adjustments. So these are the capitals of Ann and Shan after all adjustment. And Mohan is supposed to bring 1/4 of the total. When you total this, you get an amount rupees 16,05,000. And 1/4 of it Mohan will bring. So 1/4 of this amount is rupees 4,01,250. So by bank, 4,01,250. It is that simple. Now let us prepare balance sheet. So in the balance sheet, let us write capitals of all the three partners, Ann, Shan, and Mohan. Closing capital balances, that is 8,83,000, and then 7,22,000, and 4,01,250. Total of which is rupees 20,06,250. Then creditors, as in the old balance sheet, 2 lakh. No change in creditors. Then employees provident fund also no change, rupees 30,000. And there is outstanding legal charges, newly created liability of rupees 18,000. Then bank overdraft is also there of rupees 1,70,000. See, this bank overdraft can be paid if there is amount in the bank. So if you have enough cash or enough money, then you can clear this bank overdraft. But here we are showing it in one of the questions. In one of the previous questions, we were subtracting it from the bank balance, but in the balance sheet there is no bank account given. So assuming that, or there is no money in the bank, but the new partner has brought that this much amount of money, which can be easily set aside and set off against these two can be. But we are not doing this just to match the answer. Otherwise, if you are clearing the bank overdraft, then also the balance sheet will agree and the solution is correct. You have to write a note there that bank overdrafts are cleared that way. So cash, there was 1,48,000, and the new partner has brought capital of rupees 4,01,250 and premium for goodwill of rupees 1 lakh. So there is 6,49,250. So this money is enough to clear this bank overdraft. You can subtract and your balance sheet will agree. Debtors of rupees 2,05,000 less provision for bad and doubtful debts of rupees 10,000. Earlier it was 3,000. So it is 1,95,000 in the outer column. Then stock is reduced to 70%. So 2,70% is 1,40,000 reduced by 60,000 rupees. Then plant and machinery. Plant and machinery is of no change. It is 6 lakh. Then building has increased by 20%. So from 7 lakh, 20% plus, that is 1,40,000 plus, it is 8,40,000 rupees. That's all. Now grand total it, you will get 24,24,250. So this way the question is to be solved, and this was the last question in the exercise. I hope that you have watched the full chapter in the previous videos and you have understood admission of a partner very well. In case you are having any doubt related to a particular video, then please put your comment in that video itself. If you find the information good here, if you like the video, then share it with your friends, put a like, subscribe to the channel so that your friends may also be benefited from the channel. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for watching this video.